FX Nation, what's up guys? Welcome back to the channel. Welcome back to another video. And of course, welcome back to Trading with a Purpose. And in this video, we're going to go ahead and start out with basically the orientation for each of the pairs that we're going to follow for the entire year. So I know I said last video I was going to do NAS 100 first. I'm actually going to do gold. So we're going to do XAU USD orientation today. Let's jump right into this video, guys. Let's get to know gold and what it likes to do, its behaviors and tactics, things of that nature. What can we learn about gold? So let's first cover key characteristics of gold. The number one thing about gold is volatility. Gold has a much higher ADR range, or average daily range, compared to most currency pairs. For example, it's not uncommon for gold to move over 200 pips in a single session, making it ideal for traders looking for big opportunities. We're going to talk about the ADR for each pair, obviously, as we get into the charts, but it's very easy for this pair to move. So volatility is definitely something that gold has a lot of. And if you don't know what you're doing, if you've never traded this instrument before, or this asset before, it'll literally eat you alive in one session. Safe haven asset. So gold acts as a hedge during economic uncertainty. When the markets are risk adverse, like during geopolitical tensions or a stock market crash, gold often sees strength. So think back to pandemic, people were freaking out, stock market took a crash, gold went up, right? Think of 2008 housing crisis. So any of these type of scenarios, gold is always going to be seen as a safe haven asset. Inverse correlation with USD, or the dollar. In most cases, when the dollar weakens, when the US dollar weakens, gold strengthens, and vice versa. However, there are times when both rise together due to global uncertainty. Always keep an eye on the broader market context. Psychological levels. So gold traders love round numbers like 1800, 1900, 2000. These levels often act as magnets, with price consolidating or reversing near them. You're going to see this a lot in the charts when we get to looking at the gold chart. So keep this in mind. Round numbers matter in gold. If you can match round numbers with support and resistance and other things that we'll talk about. So these characteristics make gold unique and also incredibly rewarding to trade if you know how to handle its volatility. And that is the key point, how to handle the volatility. All right, so let's talk about the market behavior and influences for gold. So number one, microeconomic data. Gold reacts strongly to key economic releases like non-farm payroll, NFP. A weak NFP report often weakens USD, pushing gold higher. CPI number, inflation data. Gold thrives in inflationary environments because it's seen as a hedge. Central bank policies. So the Federal Reserve's interest rate decisions have a direct impact on gold. When interest rates rise, gold may weaken because higher yields make it less attractive. Conversely, when rates fall, gold shines. Geopolitical events. Gold is a go-to safe haven during times of political instability or crisis. Think about spikes that we had before during Brexit, US-China tensions, or even the COVID-19 pandemic. All these things scared investors. They all took their money out of the market and immediately goes into a safe haven asset like gold. Now let's talk about risk sentiment. Gold thrives in a risk-off environment when investors are fleeing riskier assets like stocks. However, in risk-on environments, gold may stagnate or decline as traders favor equities. So there's a balance depending on what the markets are doing. So for example, if the stock market drops sharply and there's uncertainty about the economy, you can almost always expect gold to rally. Now let's talk about technical aspects and setups. So support and resistance zone. Gold is highly reactive to major support and resistance levels, especially near psychological prices. For example, when gold approaches 1900, it often consolidates or forms manipulation patterns before reversing or breaking out higher. The ADR. Gold's ADR is crucial to understanding potential moves. For example, if gold has already moved 2 times its own ADR mid-session, you might expect a reversal rather than continuation. Manipulation zone. Gold frequently exhibits stop hunts near key levels. For instance, you might see price break above 1850 briefly, only to reverse back down. Recognizing these patterns will save you from falling into traps. Reversal setups. Gold often forms M&W patterns around manipulations. These patterns are key for spotting high probability entries in our strategy. So why trade gold? Why trade XAU USD? Well, the very first thing is volatility equals opportunity. Gold's large price swings make it ideal for traders looking to capture significant moves within a single session. That's pretty obvious, right? And the number one thing of why you would want to trade gold is the volatility. Clear patterns. Despite its volatility, gold respects market structure and key levels beautifully, making it a great fit for the disciplined trading approach will follow. Diverse influence. Gold isn't just affected by Forex market dynamics. It's tied to commodity, the US dollar, and even global events. Trading gold gives us a well-rounded perspective on the market. So let's go ahead and jump over to the charts right now. Let me just show you a couple things on gold before we end this video. All right, guys, so here we have gold. We're on a 1-month chart, okay? What do you see in this 1-month chart? I want you to pay attention to the entire chart. What do you see? Going back to 1999, what do you notice specifically about gold? If you haven't noticed yet, okay, basically gold is always in an uptrend. Clearly you can see what's happening, okay? So the likelihood of us trading gold is very likely that we're going to be looking to buy gold, not sell it. If we just look at the monthly chart and we go to the weekly chart and the daily chart, all of these charts tell us the exact same thing, that we're always in an uptrend on the higher time frame. Of course, any uptrend is going to have retracements. That's perfectly fine. But the important aspect to notice right away is that literally gold is just always in an uptrend. Most of our trades should reflect. Most of our trades that we should look for should be buys. All right, guys, so that is a quick introduction into gold. All right, now the next video we're going to do NAS 100. That should be out probably Sunday, Monday. And then we'll have the other 2, pound JPY, pound USD. The link to the Discord should be ready by the next video of NAS 100. So I'll have that for you guys. You guys can start joining the Discord, and then we can start having conversations and things of that nature. All again done on Discord. Guys, get ready for the next 3 videos coming up for each of the individual pairs, as we again get to know these pairs intimately and get to know some facts about them before we start trading them. All right, as always, guys, please make sure that you're subscribing to the channel, like the video, share the content, and we'll see you in the next one.